This is really scary because if stocks are going to go down a lot, the first thing they need to do is to go down by a little bit. Pay close attention here because here I'm highlighting consecutive red weekly candles. Here we have three. That was a dip. Here we have three. That was a dip. Here we got two. That was a dip. Here we got two. That was a dip. Here we got a whole bunch. That was a correction, right? That's a bear market. That's a 20% decline. Right now, our system, whoa, don't talk about your system, talk about the stocks. Well, that's exactly what I'm going to do, President Trump. Give me 1 second here. We're going to look at SH and PSQ, and we're going to go back in time here because this is getting a little bit curious. What it shows us right now is that PSQ and SH have both been trying to go up, which means the S&P is going to go down for about a month now. And right now, we have a window of opportunity of roughly 3 months. So what that basically means is that we think, again, our system, the algo.com, thinks that, here, I'll give you a link if you want to go read more about that. It basically means that it thinks we're going to go up. So when we look here to SH, if you think this chart's going to go up, it means the S&P is going to go down. Let's inspect it a little bit more closely here because you can clearly see where we were oversold from. So all the way down, it tried to stop going down right here, dead cat bounce. It's trying to stop going down again. A little bit easier to see if we go here to a line chart. We can clearly see a little bit of a curl right here. So the alert's a little bit red. It's currently down by about 0.6%. So it has to hold into Friday. To make it really simple, in the first 2 minutes, the only way that we can go down a lot is if we go down a little bit first. I know that sounds really simple, but when we lose support, like weekly higher lows, we lose the July high, and we lose round numbers, but recapture it. That's called a bounce. Bounces are nice, but bounces are not sufficient for a reversal. Right now, there's a big battle happening. The market's supposed to go down, which means SH should go up. It's supposed to have done that for a while ago, though. Whoa, don't talk about that. Talk about stocks going up. This guy's supposed to be fired. Why is he still here? Well, make it really brief today, Justin, because the people have been waiting for almost 2 weeks for this video, so let's get it out already. All right, I agree. If we look back in time here, we can go to SOXX, and this one right here basically shows us that if chips lead tech and tech lead SPY, SOXX gave us an alert going all the way back to July 27th. That's a long time ago, 5 weeks ago. Yes, so the market has been due to go down, and it should be going down, but it's not going down. So the notes were pretty helpful. I encourage you to pause if you want to. The most important one here is that after we lost 639, and we're just above by a whisker right now, Google is helping to snap us back in after hours here, but the gains have to hold until Friday. What this basically means is that if we go here to our note, now that we've lost 639, there's one of two things that could have happened. Let's make it really simple here. We're either going to go fill the gap, and it's now going to be the 10th, ninth week again in a row. As of right now, if we look here to our hollow candles, in the last 10 candles, hollow. There's only one full candle. It's a bearish engulfing candle. So 9 out of the last 10 weeks, we've actually closed higher on a Friday than we started on Monday. This week is no different. We got a hollow candle. So technically, we opened lower. We're currently red, but during the session, which right now we're looking at a weekly chart, that's why it says 1W up here. That basically means that they've been bidding it up. Gap downs are for buying. The really big question is going to be what happens on the gap fill. Let me show you a quick chart here because this is very, very curious. Here we got NVIDIA on the left and we got the S&P on the right. As you can see right now, there is an M forming. If I delete it and I go back in time to show you how we got here, let's delete the uptrend. Here we go. NVIDIA on the left, S&P on the right. So we stopped going up. I would argue we're going sideways on NVIDIA now. Before we slam down to the 50 MA, well, we get pretty close to testing it. Look right here. There's a bit of space in between here, but ultimately it gets tested. Well, the S&P might have put in his first leg, right? I don't know. It might be going for the second one here. Got pretty close to the 50 MA, but it didn't print a lower low. So what I'm really unsure about now is, are we really going to go down? Because we've been due to go down. We should be going down. It's a really good risk reward, but it's just not happening. Right now, like I said, 5.8 to 1. That's calling for a 15% correction on the S&P 500. A 15% correction from where we are right now, that's a pretty big correction. Let's do the math together here. What's going on here? I want to go back to YouTube's. There we go. Oh, head and shoulders, knees and toes. Yeah, that's a bearish pattern too. So if we look here to the S&P, like we're invalidating it right now, but let's go back to NVIDIA. What do we have here? Topping pattern and resistance. That's right. There's a lot of charts that actually look like this. So if we go here to QQQ, I think this one's a little bit more evident. Here it kind of really looks like NVIDIA. So if NVIDIA is leading the S&P, and meaning that the NASDAQ is leading the S&P, could this really be a bigger M that's forming? Like a 15% correction on the S&P, like that's a pretty big correction. Let's go to our calculator. 640 times 0.85 is equal to 544. So our system right now, again, not that it's right, I'm just looking at it in terms of risk reward, says that 544, that's all the way down here. If the idea of going down here scares you, you need to buy some insurance. By the way, people are doing that. The VIX had a big move. It's up to 17, but it's still in the teens. Insurance is still cheap. Head and shoulders usually lead to knees and toes, right? That's called the more downside. I'm going to ask you for a huge favor. If you could please consider smashing a thumbs up or subscribing to the channel, I would greatly, greatly appreciate that. Thank you ahead of time. All right, moving forward here. So we're already going down a little bit. We've lost the weekly low. We're below it. That's what this means. We went all the way down. For us to recapture it or a weekly failed breakdown, we have to be looking for these right here. One more reason why it's really notable. Let's go here to the weekly chart on the S&P. We have 2 failed breakouts in a row. What's a failed breakout? Well, it's pretty simple. We have a horizontal line. We make progress or breakout, fail to hold it. By the close of the period, again, in this example here, we're talking about the 1 week. If we look here to, let me just double check, 6, I'm looking at the H, so I'm looking at the number right here. Looking at the weekly for August 11th, 64619. The week after, 64650. So we technically go higher, but close below. Same thing happened last week. It's another hollow candle, but failed breakouts. This is not good. Let me tell you the reason why. If we look here to these red periods, what do we have? Failed breakout, right? Failed breakout, failed breakout. Don't see a failed breakout there. That time it didn't happen. Failed breakout. And fail breakout led to a bearish engulfing, fail breakout. There's lots of failed breakouts in here. So it happens very consistently. I cannot overemphasize how important this pattern is. Notably, when the volume does not really support the move. Look at the volume at the bottom, right? V. Yeah, well, it's done. Just do it. Where's the buyers now? Well, they're mostly sellers. That's a big red candle. So it's not that we can't go higher. It's that who's going to be leading the charge? 2 more quick things here I want to show you really fast because I know I've been away for a while and I just want to make sure people are ready. Normally stocks like to sell off into September to the end of the year. Stocks generally bottom in October. Look right here, October of 2022. So from September or August all the way down to October, what happens? Well, stock market crash, all right? Crash right there, 10% correction or more right there, all right? We go from the 50 MA all the way down to the 200 MA. That's a decline of 20%. That's a bear market within a bear. From the high to the low, we declined by 27%. There's our August to October low. What do we got right here? Oh, another one again. That's right, another one again. Here we have August leading down to bottoming in October 23rd. Happen again. Okay, so this might be a recency bias where you expect that what happened most recently is going to happen again. I forgot what happened that week. That's a big gap down. Where's October here? August, September, October, July, August. There's our September. There's our October. It didn't really have much of a dip here, but the point is that two out of the last 3 years, again, 2022, 23, didn't happen in 24, and this year we're doing it right now. Is that potentially what's going to happen? A little bit of indigestion. A 15% drop is like it's 10%. Sorry, let's go through the numbers here. So 5% means a dip, right? 5% means dip. So grab your chips. We got some dip, right? That's going to be your, I don't know, your guacamole. 10%. Well, that's a little bit more spicy, right? A little bit of pico de gallo. So 5% is a dip, 10% is a correction, 20% is a bear market, right? That's salsa. It's red. Right now, our system, again, if it goes all the way to its target, which it could go less, it could go more. That's somewhere in between at 15%. So I'm talking about us going down to 610, right? That's my, you got to be ready to buy the dip there. So if you're buying stocks up here and the idea of going down here scares you, what if we go down to 540? What if there's a 1% chance I'm right, a 10% chance that I'm right? Are you ready for it? I know I am. Let me walk you through my notes now to get really quickly up to speed, and then let's get the takeaways here. So going into the weekend, which was yesterday at 8:30, I said that higher lows are sufficient, but it's within 1%. And then we lost it. We talked about the 2 failed breakouts in a row. And what this basically says is that if we're going to stage a monthly test, then watch out for the 9 out of 10 hollow candles versus full and 2 red candles in a row, which is what I just talked about. If we get a third in a row, oh my goodness, watch out for Friday. So what this really means is that if we're staging the weekly low and the monthly low, and now we recapture and go higher, it means that that's the low of the month we want to defend. For where? For the rest of the month. Which means that if this is another trap for the bears, it means that going forward, we cannot lose the low, right? We cannot lose the low. And it's very simple why. Very simple why. On the daily chart, now we're going to bearish. We had 1 times lower low and closing below. Now we got 2. So again, to make it really simple, the only way we can go down a lot, or 15 to 20%, which means higher time frame crashes, is by us also getting a progression on higher time frames. Daily is going to get bearish before the weekly. And right now, this is where we're tracking. We're actually tracking 2 out of 4 bear. It's actually this one right here. Let's go here. So for the weekly now, we're tracking 2 out of 4 bear. All right. We have 1 times lower low currently below. That's halfway to a bear on the weekly. So the daily broke, led to a potential break on the weekly. If we recapture it, it'll be 1 out of 4. Oh, that's halfway to a bear market. I'm taking that pretty seriously. Why? Well, do we want to lose our money? I don't. So I said higher lows are sufficient, but we just lost it. Now we have to upgrade the time frame. If we look to the monthly, this is where my higher lows are sufficient comes from. That is all the way down to 619. 619, you got to be ready for it, right? That's a lot lower than we are now. Might not even be a bounce area. Might even go lower. And this is not clickbait. I'm actually giving you a plan now. There we go. Let's look at a few more things here. So in terms of how managing my accounts, pause if you need to. Here's what I'm doing. My account just hit a new all-time high, a 17.7%. I'm thrilled about that. I got half of it in cash right now. And today, let me take a quick check here. My account's not even down that much. I think I'm down by 0.3%. Why? Well, I got some good stonks, and half my account's in cash. So I'm doing really good on this one here. My second account, again, pause if you want to here. Here's my 401k account. You can see everything I'm doing, right? What stock market crash? My stonks just want to go up. I'm also very aware that when I get this cocky, right, normally I got a black eye around the corner, which is why I'm trying to do as little as possible right now. I'm trying to be humble a little bit. Here's my current account. I showed it to you earlier. On the weekend, I was down by 0.2, and I'm currently down by 0.2, which means, again, I'm outperforming by being in cash. Sorry, my account's now down by 0.3. It must have had an after hours change here. I lost 0.1 today. My feelings are not hurt. That's okay. Why? 94% cash in this account. Pause if you want to. But here's the note. Right now, my risk reward is like really good. If my trims hit, I make 1.2%. If my targets hit, I make 10%. And I'm already up by 19. So you can see right here, like I'm up by 18.92%. So there's no need for me to be pushing things right now. Sideways is perfectly fine for me. I do not want to push it here. And the simple reason why is because if we think about what I've been trying to emphasize a little bit more lately, we could be somewhere here in the hype cycle. We could be somewhere here, somewhere here, somewhere here. I don't know. We could be anywhere. There are going to be blips along the way, even if it's the 1990s. So what we want to think about is, what are people actually saying? Are they saying that this rally's real, time to get fully invested, I got to buy more on margin, I'm a genius, I'm going to go tell everybody we're going to be rich? Or are they saying, oh my God, these are great companies, they're going to come back? What we got to think about is that we want to let this trade play out. That's what I noted here. SH, PSQ, DOG, RWM, UVXY, Algo theme remains really strong for the next 90 days. So what can we do? We're only going to buy A+ setups. If it's not an A+ setup, we're going to say no. We're going to let the cycle play out and wait for stocks to get oversold, aka mega crash. What does that mean? For stocks to become oversold, we're going to need a few data points, a few weeks, a few months, and then the reversal might happen. If we look here to SH one more time really quickly, because it's a very clean and nice pattern here. Again, we're technical analysts. Let's look at the data. So here we go. We got the news to back it up. We know why it could go higher the next 90 days. Well, again, we just heard that Trump's tariffs are illegal, but are going to stay in place. There's a rumbling happening across the ocean where this country is making some moves, right? Oh, wow. There's some spicy meatballs over there right now. I'll let you Google what all this stuff is, right? They got a parade. There's a ceasefire that's supposed to stop. Man, there's a lot going on. Woof. I don't want to be in charge right there. Anyways, all the way down, our risk is down to the stop, which is going to be right here. Right? That's our risk. Our reward is like mega up. We could go all the way back to the target. That's all we look for. So it's not like I want the market to go down. I don't like losing money, believe it or not. Today I lost a little bit. I lost less in the market, but I prefer when my account just goes up continuously, easily, without friction. But I cannot force the cycles. I have to be a market participant and realize that if we're at a point of maximum financial risk, it's only going to be evident in hindsight as the market's already rolling over. So look at the daily, look at the weekly, because we go up, we go down, we go up, we go down, rinse, repeat, back to the start, up, down, back to the start, up, down, back to the start. So all we can do now is potentially wait for a little bit longer. As I mentioned earlier, the weekly chart is breaking. It is not broken. And the monthly chart is perfectly bullish. The annual, perfectly bullish. But I'm noting the exact same setup I look for on reversals for the market to go up. The evidence is there. And this would be a very important number too. 613.23 would be a quarterly backtest like 1998. Hey, from 1998 to 2000, oh my goodness, stocks had a nice little party. But there were market peaks and market troughs along the way. The troughs you want to avoid, right? You don't want to be riding the train down. You want to go on the train up. So there you go. Roughly 16 minutes trying to keep things really tight here. Oh yeah, one more thing I forgot about here. Whoa. What about the economic data? Well, on September 17th, here's something I mentioned earlier today to Luke. I mentioned that if we think about Jerome Powell going into the FOMC meeting into September 17th, what does that mean? Well, if we want him to actually cut interest rates, but to cut more than just once, which means forecasting in a projection, which is the SCP, there's going to be additional cuts. Would it not be advantageous for us to get a little bit of a shake and bake out of the way before Jerome? Kind of like earnings. So if we go here to NVIDIA again, one more time, NVIDIA's earnings were not bad, but like, look what it did into earnings. It went like mega up already. So it's supposed to go mega big up more. Went from 136 to 180 in 90 days. Whoa, stairway to heaven. Well, now the stairway to heaven is leading to a bit of a hangover here. So for the S&P as well, what we want to think about, again, just thinking objectively, if normally into this time of the year it's weak, if now we look here to the last time we had one of those meetings, let's actually have a look here. We had the last SEP back in June. Nope, we've gone mega up. So a little bit of a dip. Well, is it going to be NVIDIA, or is Jerome Powell going to say, whoa, time to make stocks go up again? Thank you for tuning in. I will see you tomorrow.